Hello and welcome. I'm Karen McNenny, author, mediator, co-parent specialist, and divorce consultant. And this is the Good Divorce Show, where we don't just talk about how to get divorced, but how to be divorced. Whether you're considering divorce, in the middle of it, or navigating life after, you're in the right place. And it takes courage to be here. This show exists to bring divorce out of the shadows of shame and into the light of education, and to challenge the idea that divorce must be destructive or adversarial. You're going to hear from professionals and real families sharing honest stories of resilience and repair, proof that divorce can be done differently. Divorce is not a weapon, it's a tool. And when used well, it can be a tool for transformation. Thanks for being here. Let's dive in. Hello, thank you for joining me here on the Good Divorce Show. I'm Karen McNenny, your Good Divorce coach. Do you find yourself facing the journey of divorce and worried about your biggest asset, your home? The home is more than money. It's part of the story. It's part of what comforts the children. And so often it is at the center point of the asset conversation. Well, today you're going to get a few more tidbits on how to face that conversation around real estate. Today, we are chatting with Jody Bruns. She is the creator of the divorce mortgage planning profession and founder of the CDLP, which is Certified Divorce Lending Professionals. And you know, here on the Divorce Show, we're trying to educate and let you know that your team reaches beyond lawyers. There are certified divorce coaches and recovery coaches and certified divorce financial analysts. Well, here we are going right to the source of the certified divorce lending profession, because Jody was the founder. And with over 35 years in mortgage and finance, Jody pioneered an entire category of strategic support for divorcing homeowners and all of those professionals out there who serve them. Welcome to the Good Divorce Show, Jody.
Thank you, Karen, very, very much. I'm excited to have this conversation.
Well, I hate to begin with the downer part, but you, like me, have walked through your own journey of divorce. And I think that's valuable for our listeners to know that you've had the experience, you've come out the other side. Are there just a few highlights and context that you would share from your story that have really informed what we're really going to dig into today, which is how you're helping divorcing families look at their home and their real estate asset?
Yeah, absolutely. I experienced it. We had a home, we had a mortgage, and when we went through a divorce, I was just like, okay, now what? I was very, very thankful that I knew what I did, having my experience in mortgage and finance. But there was a huge eye opener as to what I didn't know. I didn't know family law. I didn't know finance and taxes as it related to divorce. And so I used to be an avid runner. That's how I powered through everything. I'd run 5 miles a day in the foothills in Colorado. And shortly after our divorce, I was running up Mount Falcon, and it just kind of dawned on me that if I went through all of this disconnect between the different professionals as it related to our house, then so did everyone else. So I
Yeah.
remember that day, I didn't go to the top of the mountain. I ran all the way down, got in my car, drove to the office, and I started pulling out divorce files that I'd worked on previously. And there it was, all of this disconnect between all the professionals. And so I started studying family law as it related to real property and the mortgage, and then the same thing on the finance and tax code side. And I was just like, oh my gosh, so I started practicing my own, I was a mortgage professional. I started
Yep.
really just diving in, working with other divorce professionals and divorcing homeowners, and really started honing in on this. I don't want to call it a craft, but this niche, if you will. And then when I got remarried and moved back to Chicago, I did the same thing, just started, partnering up with family law professionals back there. And it was one law firm in Chicago that really said, I love your educational approach. We see this disconnect. You should write a certification program for the mortgage industry. And so that's what I did. I like to say that I turned my pain into my passion. And now,
Yes.
18 years later of the Divorce Lending Association, we're out there. training and helping other mortgage professionals do the same thing, working and supporting other divorce professionals and divorcing homeowners. So that's where we are today.
Oh, I love that origination story, and I sit there right with you. The pain became the
Yeah.
passion. We're here to make a difference and to help you as you navigate through your own divorce experience. Now, Jody, you really identify that the home it's not just an asset; it's a strategy.
hmm
What do you mean? How should we be thinking about that home as a strategy as we navigate the divorce process?
So, as you know, every divorce is unique. Everyone has their own emotions, their own situation, children, whatever it is. And I think so many people go into divorce and they're grasping, right? What can I hold on to? I'm losing everything. I don't want to just totally implode. And so a lot of times they're holding on to the house. It's like
Right.
it needs to be why? What is important about the house for you? And I think so many professionals, depending on what your industry is, whether it's the financial planning, the legal side, the coaching side, the mortgage side, the real estate side, they go straight for, like, for example, I'll just say the mortgage side, they go straight for the loan application. You want to refinance, let's do that. And I don't think that's fair. I think
Mm,
they need to step back and ask the questions. Okay, I understand that you want to keep the house. What does that look like for you? Right?
yeah.
There a lot of times if the mom, for example, is wanting to keep the house, it's because of emotions. It's they don't want to
Mhm.
disrupt the children's lives anymore. They don't want to let go of the memories.
It
And
becomes this symbol,
it
and
does.
I've raised my babies here, and I need to give them stability, and, like, well, if you don't have the money to pay for it, you're not gonna be very stable.
Yeah. So I like, training our members, our other CDLPs to go a little deeper in the conversation. Why? What does that look like for you? How are we going to make it work for you? Because it's not just the mortgage payment. There's maintenance, there's,
Yeah.
all this upkeep and making sure that you're still able to live life. We
Mhm.
don't want you to be house poor and not be able to enjoy life with the kids or enjoy your own life. So when I say we want to look at it as a strategy, it's how does the house and the finances attached to the house fit into your strategy for post divorce life? And
Mm-mm.
how can we make that a reality for you? And if we can't, we're going to have an honest conversation with you about what that housing budget post divorce is going to look like so that our homeowners can make more informed decisions about what is the best strategy for them moving forward. And sometimes we have to take the emotion out of it, but we can't overlook the emotion too, because that's such an important part of, I think, the healing process for people going through
Yeah.
a divorce is recognizing their emotions. And sometimes professionals, they just overlook that and they look at it as just a business decision. And
Mm.
having gone there or gone through it, and then having worked with so many divorcing homeowners, I think that's just unfair to them to dismiss the emotions that are
Yeah.
involved in it.
Yeah, and so often until the emotions have had like you've told your story, you yourself have walked through that journey. You almost can't hear the logical part
Mhm.
because the emotional part is eclipsing that. So it serves us as professionals to tend to the fires
Yeah.
of the emotions and kind of get those fires put out so then the logical conversation can begin. So the big question, should I stay? Should I sell? And let's just go down kind of your hit list of the things that we should be considering not only individually but because here at the Good Divorce Experience we're always like we're taking mom and dad, we're taking spouses together, partners together through this process of what's on the list of things we should be considering as we ask that question, do we stay or do we sell?
So the why, it all begins with the why. And I think once we know their goals, it helps us as professionals to, help them down the road that best serves them. I also think that we need to have the conversation. In the mortgage world, we have guidelines, we have ratios, it's all, finance driven. So while I can maybe qualify you, if you will, for a mortgage, that goes right back to the concept of what's your life going to be like after that. And I
Mhm.
like to get to know my clients. There's this one share story I've shared multiple times of the baseball mom in Colorado. I am a baseball mom. And I use this story a lot just because it tells the story. And I was working with this lady and she was adamant. She was not getting rid of the marital home. Sure,
Mm.
she has 2 boys, they play competitive baseball, and it was, "I'm not moving them. They've been through so much with the divorce, I'm just not doing that." Karen, could barely qualify her for this mortgage to stay there,
Mm.
and I know how expensive competitive baseball is, and
Right.
it's ridiculous. Some of those the bats alone are like $600, and they get bent really easy in hardball. But anyway, that's a
Yeah.
different story. Um, I had the conversation with her and I said, "I understand you don't want the boys to be more disrupted, but what is going to be harder on them? Adjusting to a new home where mom is happy or staying in this family home where mom has to say, 'I'm sorry, Johnny, we can't go to Omaha for the baseball tournament this weekend because I have to make the
Yeah.
mortgage payment.'" And
Wow.
it was like a aha moment for her,
Yes.
the very few mortgage professionals would ever have that conversation. But it's one that we train to have in the CDLP program is empathy and really
Right.
understanding their life is not just a loan transaction. It's a life that we have the ability, if we're involved in the divorce process, to really impact in a very positive way. Let's help lift them
Mhm.
up and show them that there is life post divorce and it doesn't have to be full of conflict and struggle. It could truly be a new beginning. So that is
Well,
that's the story I love to share and I hope it never gets old just because it resonates so much with the different approach and the understanding that we need to be able to have and share with these divorcing homeowners, whether it's, the husband, the wife, the partners, whatever it is, we need to
mhm.
help them separate sometimes life from, I gotta have it.
Yes, and I think that we walk into divorce again, part of the Kool-Aid that we're all drinking is it's a scarcity mindset and it's a land grab,
Hmm.
and the whole goal is to get as much as possible. Like, no, we need to start looking through an abundance lens and see what can come. Maybe we can release both parents from this huge heavy burden of the house with the pool and the roof that needs to be redone and oh, what does it look like to actually be a renter for a time and have some financial freedom where you're not paying taxes, you're not in charge of the roof or the broken dishwasher, all that money gets to go to Omaha.
Yeah. Yep.
And you're so right. It's more than a spreadsheet and it's more than a transaction. But when we are working in a field that is connected with professionals that are all about closing deals and making the most for them and kind of preying sometimes upon the vulnerability and the grief and the emotional unrest of families, right?
Yeah.
That's where I get concerned.
Yeah.
Also as somebody who's walked through divorce.
I like the saying that you're either in the business of divorce or you're in the divorce business. And I like to say that
Oh.
we are in the business of divorce, where we're in the divorce world. We're trying to help make an impact. Or are you in the business of divorce where you are trying to prey, trying to take advantage? And when I first started, the divorce, mortgage strategies and stuff like that, I received a lot of hate mail. "You're an
Tell
ambulance
me more about
chaser."
that.
And I'm like, "No, I'm not chasing ambulances. I'm really trying to help. I've been there." And then it was Christmas time. It was probably 2000, what year would it have been? 2018 maybe. And I was sitting on the couch. Paul, my daughter, was there. and Paul's my husband. And I got an email, and it was from a real estate agent down in Texas named Sam. I have no idea who Sam was or what I ever did to Sam. He sent me an email and it said, "Since you specialize in divorce, I hope you have a stroke when you retire." And I was
Wow.
just like, maybe Sam is going through a divorce. I don't know.
Yeah.
But I didn't let it sway me. And I just keep
Mm.
telling myself that when people are lashing out at me for being in the business of divorce, that they don't understand my approach, the reason
Yeah.
behind what I'm doing, or how what we're doing really does impact in a positive way divorcing
Mhm.
homeowners and what they because we everyone needs a house. Everyone has the right to housing. And whether it's somebody staying in the marital home or the person vacating, they need to find a home, or maybe they're selling and they both need a place. So
That's
there
right.
are strategies that go into play. And a lot of the language used in the settlement agreements can stop mortgage financing unintendedly, but it
Mhm.
happens. So let us be involved. Let us help you move forward. And so
That's right.
those are kind of my, you know, m-
Well,
we all get it,
I
I guess.
find I find that encouraging as a fellow disruptor, and that's what we are.
Yep.
We're here to
We are.
disrupt the divorce industrial complex, which is valued at about $3 billion a
Hmm.
year.
Yep.
That is not going into the hands of families and their kids and their travel ball and their college funds. And I had someone like, "Why do you think divorce is good?" I'm like, I'm pro family. I would have given anything to have raised my children in one home with their father. But we were better off raising our children 6 blocks apart across 2 homes. And I'm proud of the good divorce we had. It's about intent and approach. However, here is a little mortgage thing that I have stumbled into, and I now have just the person to ask this question because I think it's a policy change. It's what I call the divorce penalties. And they exist in several areas
Yep.
around taxes, around insurance, around our homes. So, husband and I divorce. I'm going to maintain the home. We're all in agreement with that. And in order to get him off the mortgage and off the title, I have to fully refinance. Now, in this day and age, as we're chatting in 2025, you know as well as anyone, my house has a 2 to 3% APR. As
Yep.
soon as I refinance, I'm jumping to maybe 6 or 7, which means the mortgage I was affording that I could qualify on my own. Now I can't because you doubled my interest rates.
Well, I
And now
didn't.
right, right, right.
Let's
No, you
clarify
didn't.
that.
Right? This is the and so I wanna talk about how we can assume, right? The assumption of loans. And really what I see, my hope would be that, oh, it's the same people. We're just taking one person off the deed. And yes, Karen, you need to qualify. You need to go through the hoops to qualify for that mortgage in your own name. But why can I not bring along with me the same interest rate, the same terms of the loan that husband and I got together? As long as I qualify. I feel like it's a divorce punishment. So I might not have all my facts right, but I would love to hear a little more about how that's being treated. Are there other options? Do I got it all wrong, Jody?
So, great question. There's a lot of different approaches to this. Number one, if you have to refinance, like if the vacating spouse is adamant that their name is off the mortgage, then yes, the only way to remove their name from the mortgage is to either refinance or do what's called a qualified loan assumption, where you then qualify and they remove their name. Um, the whole interest rate thing is valid. We have so many divorcing homeowners that are at 3.25%, 2.875, whatever. And you're right, they're going up to on average 7% right now. There's different ways to approach it. Number one, you have to take into consideration that your payment on the loan, that let's just say 3%, just for my
Sure.
memory, um, if you took that loan out at 500,000, if it's now down to 400,000, the payment you're making is based off of the 500,000. So refinancing the 400,000 at a higher interest rate might not be that big of a difference, okay?
Okay.
The other thing is within the last, I'd say probably 2 or 3 years, more loan servicers, the person you make the mortgage payment to, they are allowing more loans to be assumed when traditionally the only loans that could be assumed are government loans, FHA and VA, USDA. So they're now looking at least that divorce is a life event. So they'll consider the loan assumption where they wouldn't before. It was a flat out, no, your loan is
Right.
consumable.
Yep.
So there's two types of loan assumptions. There is a legal transfer assumption, and then there's the qualified assumption. So the legal transfer assumption is you become what's called a successor in interest. And if, let's say me, if I was awarded the marital home and I was by the court order responsible for making the mortgage payment, then I could assume legal responsibility for making the mortgage payment. It does not, however, remove the other party's name from the mortgage. Okay. We have had a lot of divorce cases recently where, okay, that vacating spouse, they are confident that their spouse is not going to intentionally make the mortgage payment late. They're very financially responsible. And I'm okay with my name staying on the mortgage until rates recover and they can refinance. We also make sure that in the settlement agreement, it specifically states with certain words that the spouse keeping the home is fully legally responsible for making the mortgage payment, the taxes, the insurance, the maintenance, the upkeep, etc. So then, when the vacating spouse goes to apply for a mortgage loan to buy their own house, that existing mortgage payment is not counted against them.
'Cause that's the risk. I'm gonna stay
Well,
on the
that's a
mortgage. Now I
risk.
can't go get my house.
That's a risk, yeah, but that's a myth. So we can make sure that that's not an issue. But they
Mhm.
do remain legally responsible should the spouse staying default, okay?
Right.
And then we have the full qualified assumption. So the full qualified assumption, yes, you have to qualify in order to release them. And the good news is if you do, the same loan terms, the same interest rate, everything stays the same. However, there's a lot of, there's equity buyouts required. If you have to give your spouse, say, $100,000 for their equity share, you
Right.
can't increase the loan amount by that $100,000 because you're not wanting the same terms. So why would the lender give you the same terms? So
Mhm.
we have to make sure that number one, the divorce is final. Any equity buyout is already taken care of because the servicer doesn't want an outstanding lien or judgment against the property for that $100,000. So there's a lot more to it than just why can't I qualify? And the sad thing is there's no industry-wide guidelines as to if you meet X, Y, and Z, your assumption will be approved. Every servicer has their own terms. So you could go through a 6-month process only for that lender to come back and say, no, denied with no rhyme or
Well,
reason.
exactly.
So,
And as you said, a lot of times they won't what I'm hearing from some clients and their lenders is they won't even look at you to do that qualifying until you have the divorce decree,
mhm,
which means we're making all of these assumptions
no pun
and
intended.
dividing the property and writing the decree out and saying this is how it's going to go unless
Mhm.
and that is a really messy terrible place to be.
Yeah. So we want to make sure that if our clients are going to attempt a qualified assumption, that they do incorporate divorce mortgage planning into the settlement agreement, just so that you have a mortgage expert trained in divorce to help the attorneys, the mediators, or whomever is writing up that settlement agreement so that we are staging you, if you will, to be able to qualify and meet those lenders' requirements. So
Right.
it's a lot of people, I love this saying, and I don't know where I came up with it a couple of weeks ago, but a lot of people don't understand what divorce mortgage planning is. And if you think that divorce mortgage planning is just getting a loan, that's like saying financial planning is just opening a bank account.
Right.
And, it's kinda like those eye opener statements, right? And it's
Yeah.
true though. We are looking at language that's incorporated in the settlement agreement on the, the distribution of debt, how income is qualified, if it's gonna be any type of support income, spousal support, alimony, or maintenance. We can do different things with depending on what it's
Mhm.
called. And so we wanna be involved in the settlement, the negotiations to make sure that there's not going to be any roadblocks, that we can set them up to succeed post divorce. So there's
Mhm.
assumptions are a big thing, keeping the house, the equity buyout. Should you not? Do you buy? Do you sell? And timing. Timing is a huge thing. For example, if you have a divorcing couple and they're going to sell the marital home, and then each one of them want to, sell, or obviously sell, buy, in maybe even the same school district. But the paying spouse, and let's just, use roles husband and wife. If the husband is paying spousal support, he can then apply for a mortgage right away. Yeah, they'll count that against him, his income, but if he qualifies, he qualifies. On the other hand, the receiving spouse, she may have to wait 6 months to use that spousal support as income. So where's she going to live for 6 months? She can't qualify
I
for a
don't
month.
I think I missed something. What's the 6-month gap?
So in order
Why
to
can't she
use uh, alimony, maintenance, spousal support, and
right,
child,
all the same
child support
thing.
as income for mortgage qualification, you typically have to show 6 months proof of receipt and 3 years of
Ah,
continuance. So, in my example of
gotcha.
selling and both buying, the paying
Yes.
spouse can immediately qualify, but the receiving spouse, they have to wait for 6 months. So, what are they gonna do for
Mm,
6 months? You can't overlook those timing restrictions.
right.
You know
That's the strategy
Yeah.
around this asset. It's very complicated, and I would also say there's creativity.
Mhm.
Like, hearing you say there's all these different things that we can do and what we call stuff and how it's written up and you staying on the loan, going off the loan, a sunset period. So we want you to hear, listeners, that it isn't just who gets the house. That's not the question. It's how does this giant asset inform the future of both of these individuals, particularly if there's children. You've got a long tail of expenses that are coming along with this.
Absolutely.
Oh, so interesting. Well, we are not done here with Jody Bruns today. She is going to continue to speak to us about the house, the options, and also the emotional journey. So please stay with us, and we'll be right back with Jody Bruns, CDLP, that's Certified Divorce Lending Professional. If this conversation is resonating, there are tools to help you put it into practice. Grab my book, The Good Divorce: How to End Your Marriage Without Ending Your Family. It offers clear guidance for navigating divorce with intention and care, especially when kids are involved. And for ongoing support and education, you can join me at the Good Divorce Academy, which is my online community and classroom. And if you'd like to work with me directly, you're going to find more information at thegooddivorcecoach.com. Welcome back to the Good Divorce Show. Thanks for sticking with us today. Very valuable conversation around that big, giant asset that sits in the middle of most families, our home. And today it's Jody Bruns. She is the founder of the CDLP certification, which is helping lenders better understand how to support families going through divorce. Welcome back,
Thank
Jody.
you very much.
I want to just dig in a little bit that through your lens and all the years you have done this, and particularly in the divorce world, what are the things that just irritate you? And if we had some pixie dust, we could change it
Go.
because maybe we can. There might be more than one.
Um My biggest irritation, pet peeve, if you will, is those professionals who want to take advantage of divorcing couples.
Yeah.
And in our industry, there are some very good, very professional, integrity driven people. And then there are those that are chasing commissions. And my biggest pet peeve is when mortgage professionals are told, hey, you can niche proof or you can rate proof your mortgage pipeline. Divorcing clients, if they're told to refinance, they have to refinance. It's like shooting fish in a barrel. They don't care about rate, they have to do it. And I think that is a total disregard. It's a total disservice. And it is totally disrespectful to the integrity and the financial fiscal responsibility of a divorcing homeowner. And even if they don't understand the financial side of it, as professionals, we should care. And that is my, don't even go there with me. So, and I teach that
So
to our members. It's like you have to be that financial person that shows them the true answers, the true path forward. Don't be so driven by a commission that your income is based on the outcome of the divorce. I think that
mhm.
that's wrong in many, many ways.
Which is why you're sitting right here on the Good Divorce Show, because we're here to do no more harm. Enough harm has been done in these families. We really need to support them. Now, can you take what you just talked about, put it in first grade language so that our listeners know what to watch for as they're in this conversation? Because it's often the case where we just hand over our keys to an expert and say they've got my best interest at heart and I'm going to be taken care of. And then you find out down the road you're not. So, this idea of like rate, fix, I don't even know what you said. So take off your curse of knowledge and give it to us in first grade terms so that we can protect ourselves from this particular problem.
If you are talking to a mortgage professional and you're going through a divorce and you were told to look at your options for refinancing or buying a house, and if that mortgage professional says, well, in order for me to move forward, I need you to fill out my application. I'm going to text you a link right now. That should be your first red flag because they're going straight for the loan. And
Okay.
I that's wrong. They need to ask you what's going on? How can I
A
help
lot of
you?
questions.
Yeah. How can I help
Need to
you?
start with a yeah.
What is your long-term goal? Where are you in the divorce process? Have you spoken to your financial advisor about what's best for you financially? So if you are speaking to a mortgage professional and they go straight for the application without understanding what you are going through, move on. Call a certified divorce planning professional because I promise you they will not do that. So,
Okay, that's great. And you established this certification. You came into the divorce space and said we've got a gap, we need to help people. How long has it existed? Where are people located? Can they work across state lines? Let's learn a little bit about this CDLP and why we should be looking out for it.
yeah, so the certified divorce planning professional, I launched it in 2014. So we are 11 years in strong. We have CDLP members that can work in all 50 states. I think we actually have them physically located in 47 states. So that's something I'm really excited and proud about. Our CDLPs, if for the divorce mortgage planning consulting, they can work across state lines.
Okay.
If they are actually going to help you facilitate a mortgage when ready, then they're bound by, depending on what their state licensings are. So I'm super excited about it. It's mortgage professionals originating at this level instead of this level. I always tell them
Yeah.
take off your blinders because it doesn't matter what is in front of you, it's what you see in the big picture. And
Mhm.
it's
Mhm.
all about perspective, and how we can make a bigger impact positively in our clients' lives.
And it might be that maybe I find a CDLP online, I'm working with them, I find out, oh, they're not in my state. Now I do need to kind of start working with a lender. Can there be a handoff that between those professionals that kind of keeps me on track?
So typically, when we have our CDLPs who are working for the on the consulting side across state lines, they're going to be upfront with you and tell you, that I'm licensed in ABC states and I'm not going to be able to help you facilitate the mortgage. However, I have a fellow colleague that's a CDLP that can help you. Oftentimes, they have team members in their mortgage company that will be able to help you with the loan. And the good thing about that is you have your CDLP who's been working with you, their hands are still involved in that case. So they can make sure that the integrity of the plan that we've put together with your legal team, et cetera, will
Mm.
still be executed so that you're closing in compliance with your court order.
Oh, that's wonderful. And if I own my house in Montana and I got my mortgage from my local lender, as one does, and then they sell my mortgage to a larger brokerage and then it gets sold again. And now my mortgage is with Bob's Lending and I don't even know where it's at. And I'm going through the divorce. Do I still have to work through Bob's Lending because they hold the mortgage, or can I pick up and still do an assumption somewhere else? Because it seems like if you're going to do an assumption, a qualified assumption, it's with the people who already have your money and have your loan.
Correct.
So what?
Yeah, if you're going to do a qualified assumption, you have to work with the servicer who has current ownership of your mortgage. If you're starting
Gotcha.
fresh, you can work with whomever you choose. So
Hmm.
it's just that
Okay.
qualified assumption. And if you're doing what we talked about earlier, the simple transfer, the legal assumption where nothing's changing in the mortgage, you are completely fine. You can do that without the consent of the lender because you're protected under federal statute that they cannot accelerate the due on sale clause if ownership is transferred to one spouse incident to a divorce order.
Which is when my spouse is still on the mortgage, but in the decree it says I am 100% responsible for it.
Mhm.
And does their name come off the title?
In some cases, um, that's an item of contention sometimes because if you're awarded the home, you want full ownership. But
Yep.
if you're the other spouse and your name is still tied to the mortgage, you want some kind of control over the house. And here's a really good example on that. I was working with another CDLP and an attorney out of Florida. And what had happened was it was an elder gentleman. He had gotten married and the mortgage was in his name. They got a divorce. The wife was awarded the home. So ownership was transferred from him to her, with his name being the only one on the mortgage. And then she transferred ownership to her son. So
Oh,
the son, stepson, former stepson, now owns the house. He doesn't care if he makes the mortgage payment on time or not. It's not going to affect him. It's going to affect the original mortgagee, the husband. So
yes.
that's why you probably don't want to transfer ownership, or let's say it's not that big of a deal for that situation. But let's say that you transfer ownership to your spouse and maybe your spouse is uh, killed in a car accident. You don't have the right to sell the house because you transferred ownership to them. And so now their ownership is in probate or whatever, but yeah, your name is still on the mortgage.
Oh, what a hot
It is a
mess.
hot mess. So we have to navigate that part of it. And, that's where the attorneys and legal language comes into play. So,
Right.
it's not a clean
Because you
thing.
also, yeah, you were also identifying, okay, we're really amicable. We're going to raise our kids together another 10 years. We want this house in the family. We both know that that's in the best interest. So I'm going to assume ownership. We're both going to stay on the title. We're both going to stay on the mortgage, but we write in there that I'm the only one responsible for that mortgage so that dad can go get
Mhm.
a mortgage of his
Yeah.
own. Now, what kind of proof is he going to need to take to his new lender? Is it just the decree, or is it my bank statements that I'm the only one who's paid that for a year? Is it different for different lenders? Like you said, we don't have a lot of consistency across
Yeah.
the
To
industry.
show you how inconsistent that is, if you go back just 2 years ago, it depended on the agency. One of our big agencies, we're all familiar with Fannie Mae, all they needed was a copy of the court order. But then you have Freddie. Freddie says, well, if your name is still on title, it has to be removed from title in order for us to do that. And then you have FHA who would say, well, we need the court order and we need 12 months proof of payment from the other spouse. And then you
Right. I've
fast
heard
forward
all
to
of these.
today, and they're all with Fannie. All we need today is the copy of the court order. We don't need proof of payment, et cetera. But if your spouse makes a mortgage payment late, then the underwriter may say, well, we want proof that they've been making the payment and, it's not going to come back on you as a legal obligation. So it's not
Right.
clear cut. You can't just cut the house down the middle and say, "You go your way, you go my way, and everything's gonna be
Mhm.
kosher." It's a moving, you know,
Mm.
transition, and no
And the
two are
fact
ever
that
the
it's
same.
it's exactly, that's what makes it hard, which is why you need professionals on your team more than a lawyer, because again, lawyers are really good at the thing that they do, but they don't do it
Right.
all. They're not gonna look at your parenting plan and care about what your decisions are around curfew and when the kid gets a car. And they're not necessarily gonna dive into these creative ways on this asset, right? We wanna expand the team.
Yeah.
Okay, Jody, I feel like I'm on Jeopardy. Here's another
No.
one. So we've got a 1031 exchange. So I'd like you to explain what that is, and then kind of the gooey part when a family is carried over, mom and dad, a 1031 exchange into the house they own, blah, blah, blah. So you do the explanation, because this is another messy one that can come with our real estate asset.
So 1031s can be very messy. There's
First, tell us what it
I will.
is for those who aren't
So
familiar. Okay.
1031 exchange is where you're protected for a tax basis. You purchase a home as an investment property and you've rolled over the gain, if you will, from selling another like property, rental property, into this new purchase, and you are putting off the taxable gain from the property you just sold because you rolled it into this new property. And so it's a
Mhm.
great, tax vehicle if you buy and sell investment properties. In a divorce situation, well, I should clarify too that there's a quote unquote 2-year look back. And what that means is the IRS would like for you to hold on to that new property, the investment property, for 2 years before you maybe move into it as a primary residence. And when you get a divorce, for example, let's say that you just bought a new investment property as a happily married couple, and maybe 6 months into this investment property, you're getting a divorce and somebody needs a place to live. So you're like, well, I'll move into the investment property that we just bought. And then you're saying, okay, but you told the IRS that it's not a primary residence, that we're going to roll the gain into a like property. If it's a divorce situation, the IRS is going to be almost always, I'm not going to speak for the IRS, but they understand. It's a life event. Our intent was not for this to be a primary residence. So we're going to be okay, with you moving into it as an investment property. And when you actually look at the IRS tax rule around 1031 exchanges, there is no written 2-year look back period. It's what they would like to see.
Hmm.
So if you're in that situation and you do investment properties and you've purchased the home with your spouse as a 1031 exchange, and you unfortunately go through a divorce and now need a place to live, there is an explanation for a life event, and this isn't what our intent was. And you show that, here's our divorce situation. There may be a need in need of a paper trail, et cetera. But at least I can say that I've seen a lot of tax codes where there are exemptions for divorce.
Well,
And
that's good news.
if there's anything nice about the IRS, it's regarding divorce.
That's amazing. And I always say, if you don't ask, you don't know.
That's right.
And letters around what's happening, this life event could make a change. That's
Exactly.
super helpful. Well, we know that divorce is one of the largest changes in life and comes with a big, big mix of emotions for all of us. And we move through that differently. We came to our marriages differently. And you, in particular, have a really beautiful lens through your faith that you take into consideration as you think about your own marriage, your divorce, your remarriage, and how you support families. And you've written about it. Can you tell us a little bit about this part of your work and your life and the book that you now have available to support others?
Yeah. So when I was going through my divorce, well, first of all, I grew up going to church every Sunday, etc. And I always kept my faith private. And and I don't know why. Um, it's not like it was a hidden thing in my family. I know I had an aunt who kind of faith shamed me because I always felt like I wasn't a big enough Christian for her. But and when I went through a
I mean,
divorce,
just pause on that. Faith shaming, those two things should not ever go together.
that's true. But I when I went through my divorce, I was alone. I had 5 children, I was super active, but I felt just alone. And I was at a baseball game waiting for the kids to get there with their dad, and I was reading a book called The Power of a Positive Woman by Cheryl Ladd. And it was very, Christ driven, and it just really, really resonated with me. And that's when I realized the one person who could get me through my divorce was God. And so I really leaned into that, and I've never looked back from it. And then just recently I wrote a book called Anchored in Faith, and it's actually a devotional journey through divorce. And it's called Anchored in Faith. I'll show you a picture.
Yeah, let's get it right up there.
There we go.
Beautiful.
And I'm really proud of it. Literally, it got published a couple weeks ago. And there's a
Oh,
companion journal that comes with it, but it shares, scripture. It shares my thoughts, how that applied to me and my journey. And my hope is that, whether you're a single mom like I was, or you're just going through this journey, that it will help you realize that you're not alone. God doesn't, you know, hold divorce against you. He is the answer to your recovery and moving forward. So
oh,
thank
it's
you for
so
letting me share that.
absolutely. I think it's so beautiful. And I know it's going to really resonate with someone who's listening today and being reminded that God didn't leave you, even
Yeah.
if your spouse did.
Yeah.
Yeah.
Absolutely.
Jody, just a wealth of, I just love having a smarty pants on the show, total nerd and passionate. And you are a disruptor in the divorce industry. And you are going out there and saying, we need to do it different. And I hope you keep going because there are still policies across this industry and beyond that need our attention and many families who need our support. So how can folks find you specifically and CDLPs and certainly I think we've made the case of why you should be talking to a CDLP. So give us the takeaway and the send off.
Yeah. So you can find me specifically at jodybruns.com. You can follow me on Instagram at jodybrunnsofficial.com, and you can find a local CDLP, lots of resources and trainings available at the divorcelendingassociation.com.
And a shout out to your podcast.
Oh, our podcast is called Divorce Real Estate and Mortgage Strategies. Let me get that one straight.
Sounds like a real page turner.
Yeah, exactly right.
Just wonderful. We'll make sure all of that is in the notes. Thank you for your time, Jody.
Thank you.
And I really want to celebrate you for taking the time to listen today, to do your research, to be committed and an advocate, and know that you can design your own divorce and it can be good. And remember, everything will be okay in the end. And if it's not okay, it's not the end.